Good afternoon, welcome to GrainTV. My name is Cody. This is Brock Shimano. Today is Thursday the 10th, and we had the market trading a bit lower here. Take a look at corn trading down a penny, soybeans down 13 cents, and wheat in Chicago trading down 6 3/4. We did have export sales reported this morning. Brock, what did we see?
We didn't really have too many surprises in the export sales report this morning. Eyes were kind of focused on the soybean market, see if we were going to see any net cancellations. We did, in fact, get some cancellations, but we did have net sales of about 79,000 metric tons. That was within analyst expectations. Corn coming just on the low side of analyst expectations, 658,000 metric tons reported there, and wheat a mere 41,000 metric tons. If we take a look at where we stand for this marketing year, we did get some revisions in the USDA report yesterday for both corn and the soybean export sales. If you take a look at the chart here, you can see the red line is the seasonal pace to meet that revised pace set forth by the USDA for soybeans. The blue bars are what we're seeing for export sales, and then notice that green line. That is the line that shows how many million bushels ahead of pace we are to meet the current USDA projections using the right-hand scale there. So you can see soybeans has fallen off substantially on the pace ahead to meet those USDA projections over the last several weeks. Similar story for corn. Corn, once again, we did get those revisions yesterday, but the pace to meet the current USDA projections, we're currently running well ahead of pace there, about 189 million bushels ahead of pace, and we continue to see that be pretty strong here over the middle part of the marketing year.
Yeah, absolutely. Brock, one of the things that you mentioned here when you first started talking about the export sales is that people were concerned and looking for cancellations out of China. Well, we may not have gotten a huge amount of cancellations. We may actually have booked for this week. We may have actually booked some sales. But when you look at the news wire, we saw 500,000 tons of U.S. and South American beans defaulted on by buyers in China. That is a serious problem here, and really what that sheds light on is just how bad the crush margin is over there and how difficult it is for those crushing plants to get letters of credit to finance those purchases. So the bottom line here is that we were looking for export sales cancellations, and though we may not have gotten them in that actual report, we certainly have the tone of export sales cancellations over the soybean market. Now, I was talking to a trader earlier on today, and his thoughts were, this is very bearish. Well, it is bearish, but we are still very much in that bullish trend. We sold off today, but we still have very tight stock. So just be cautious out there. I would prefer, if it was me, I'd prefer to break that strong bull trend before you really start to get negative and start to get selling this soybean market, because it is still very much in that bullish trend that we've been observing here for the last couple months, and it's hard sometimes to fight that. You may get rebounds, and that can be pretty dangerous in the futures market.
Another commodity that was having a little bit of logistical problems today was the wheat market. We did see Egypt's gas have some problems with their letters of credit in Russia. They had some of their cargoes actually halted at a Russian port today as well. So we saw that possibly pressure the wheat market here a little bit today, but I think overall the weather is what is actually pressuring the wheat market. And if you take a look at the chart here, Cody, what do you see there on the landscape?
Yeah, when you look at wheat, you'll notice here that it's just had a little bit of a difficult run. We had a great rally, but now we came back, and you notice we're touching that 200-day moving average. That's the red line here. And this is a daily wheat chart for the May contract. You'll also notice that when you draw those Fibonacci lines, the green retracement level, that's about 38%, and that's typically an area where we see support. So not only do you have that 38% retracement, but you also have the 200-day moving average, and that's offering up some support. We got down around that 659 level today, but we were able to rally back by the end of the day. So I wouldn't be surprised if this area continues to provide some support here in the near term. But when you look at the news out there, wheat, there's just not a lot. Yesterday we had USDA coming out raising ending stocks, and then we also have some precipitation coming into the Midwest next week that also put some pressure on this wheat market. So when you look at the grains, you have a lot of support levels that we have to work through before we break this uptrend. And I think that's what you want to be paying attention to, because you're really going to have to work through those before I think before you really want to get short this thing.
That'll wrap it up today on Thursday for a mostly bearish day in the markets. If you have any questions about what we talked about, head to our website, grainhedge.com, or give us a call, 877-472-4607.